Welcome back. As we've been telling you, a lot of markets across Asia are actually tracking gains, including Japan, Australia, Singapore. The Hong Kong market is the one that's weak, down about 0.5%. The implied open is actually not giving us any clarity in terms of direction. It's very flat. Last time we checked was 9 points lower, 15 points lower now. So that's how the start could be. Lots of stocks to talk about. So let's straight away get to the CNBC-TV18 list of top stocks to watch. Starting first with ITC. Nimesh, it's block season galore. Oh, and this could be a huge one, right? If BAT decides to go ahead.
Absolutely. Another large block. So yesterday we saw Ganwal selling a stake worth 12,000 crores. And today BAT is looking to sell a 2.3% stake in ITC. And they will raise close to 11,600 crores. The floor price is 400 rupees, which is almost a 8% discount to yesterday's closing price. There was an indication that this large block will come. So it's come today. Interestingly, the stock got ex-dividend as well. And the investors who buy today won't be eligible for the dividend. So that's a clarity there. But a large block and finally BAT stake will fall below 25% as well. So that's also a bit of a surprising. But yes, a large block. And I understand most of the investors are anchored towards the lower end of the price band. So you might see a bit of a red to start with on ITC today.
All right, Nimesh, thanks a lot. We'll keep an eye out on ITC. NMDC is the other one that could start off on the back foot. That's because the operating performance is a little lower than what the street was working with. So you pull up the big numbers in comparison to our poll, you can see the top line was a little bit better, but the operating performance a little bit weaker. Let's explain this to you. Volumes are mildly higher on a year-on-year basis. On a sequential basis, there was a big recovery. However, the realizations was a disappointment because on a sequential basis, you're seeing that the realization has come down by around 350 rupees per ton. Then how come they managed to beat the top line when the realizations are weaker than expected? That's because of pellets as well as other minerals. Out there, you see there was a much larger contribution. It's normally a very small percentage of the business, but this time around, it was much larger. Moving to the reason of the operational miss is because other expenditure spiked up big time. It was up 69% on a sequential basis, and on a year-on-year basis, it's up by close to around 27%. That could be a phenomenon because of towards the end of the year, you see some kind of rebalances, which could probably be the case. Because if you look at other expenditure as a percentage of sales, that's moved up to around 15%, which is much higher than the 10 to around 12% that we normally see. So going with the red tick out here. However, you need to note that Q1 FY26 will be much better because they had gone ahead and increased prices by around 440 rupees at the start of May. So red to start, but expect the stock to recover in trade today.
All right, Nigel, thanks very much for that. So NMDC in focus, lots of interest, lots of trading interest around this one, always. Well, Bharat Dynamics is the next one we want to focus on. Ria is here with details. Ria, morning.
Well, good morning. Let's take a look at how the numbers have panned out for Bharat Dynamics in this quarter. Firstly, for FY25, the revenue has gone up by around 41% over the previous year, which is well above the company's guidance of 20 to 25% growth. But on the profitability front, here's where the company has taken a big hit this time around. The FY25 margins have declined by around 850 basis points over the previous year, coming in at just 14%, which is well below the company's guidance of 20% margins. Even the Q4 EBITDA margins have fallen by over 2,000 basis points compared to the previous year, but historically the quarterly margins have been quite volatile for the company. On the order book front, order book is quite strong at around rupees 22,700 crores as per the provisional update of the company, and this is well within the guidance range of an average 20,000 crore order book over the next 2 to 3 years. Export revenues have also continued to ramp up quite significantly for the company, going up by over 7 times over the previous year, but this was off a low base, and the export revenue contribution has also come up to 36% in FY25 versus just about 7% in the last year. But largely because of the sharp miss on the profitability front, the stock is expected to open lower today.
Okay, all right. Yeah, it's also run up, and now there's a miss on the operational parameters. Got that, Ria. Thanks very much. Let's talk about LIC's numbers. Yash is here. Yash, how's the performance?
Well, Surabhi, the expectation in terms of the estimates that we were working with was quite muted. Now, just to put the numbers in one line, the numbers for the fourth quarter have come ahead of expectations, but still, in absolute sense, they do remain weak. So as far as the new business premium, total APE, retail APE and value of new business is concerned, all of them have come ahead of estimates. Margins have come below estimates as well. But as far as absolute numbers is concerned, a contraction seen on all the fronts. New business premium contracting by 9%, total AP down 3%, retail AP down 9%, value of new business contracting by 14%, and value of new business margin On a year-on-year basis, that has contracted 239 basis points, coming in at 18.75% versus 21.1%. I've still gone ahead with green on the stock because as per estimates, what the street was baking in, the numbers are ahead of those estimates, and B, the stock has significantly corrected. It's down nearly about 40% from its 52-week high, and hence going with green on this one.
All right, Yash, thank you very much for that. So LIC, I mean, amongst life insurers, and yesterday in closing bell, we had a long discussion with Deepak Shenoy on LIC. It is the laggard amongst life insurers, which have done very well. Nigel, JK Lakshmi Cement, Hindustan Copper, tell us more.
Yeah, and NMDC Steel. What a busy evening, right? Yeah. All right. Let's focus on the good one first. JK Lakshmi Cement. Actually, a very good set of numbers is what we saw there. Operationally, the numbers were much better. I was comparing it with Motilal Oswal estimates, and the EBITDA estimates actually are 20% better out there. Revenue growth of around 6.5% approximately, which was driven by higher volumes because the volume growth was up by close to around 10%. Let's explain why it was a beat. Because if you look at the operational performance, the margins have improved steadily. And on an EBITDA per ton, it's improved from around 660 rupees per ton to around 960 rupees per ton. That's a good 300 rupee increase on a sequential basis. And the street will like that. Yes, they got hit because transport costs did go up. But the benefit of lower power and fuel costs is clearly making the difference because that was down by close to around 6%. When you have sales volumes going up by around 10%, telling you operating leverage played out there. The profit number as well was up by close to around 19%, while the finance cost was more or less flattish. And they're keeping their debt under check in spite of adding capacity. So the street will like that. They're currently at around 16 million tons, headed to around 30 million tons, going with green on JK Lakshmi Cement. Next up, Hindustan Copper. The stock is already up close to around 10% in the last 1 week or so. But these numbers actually look pretty good. Top line, there's a good growth of close to around 30%. The EBITDA number has jumped up by close to around 17%. So on a year-on-year basis, the margins have come in lower. But on a sequential basis, there's been a good recovery in margins by close to around 300 basis points at around 36%. Other expenditure did dip down by close to around 4%, which is good for them, while the employee cost did move up. However, they got some benefit of lower power cost. So all in all, the numbers actually look good, though the stock has already run up. And valuation-wise, it's hard to justify a stock at more than 50 times its earnings. But we'll have to see if copper prices are going to move up, then this is the only pure play on copper prices. Profit number as well was up by close to around 50%, but that's because the other income did jump up. So going with green on Hindustan Copper. And finally, NMDC Steel. Well, going with green on this one because the EBITDA losses, just take a look at that. We're getting used to seeing a number of more than 500-600 crores thereabout. That's come down to around 291 crores. So you like that? In all probability, Q1 will be even better because prices have improved and demand for steel as well has improved. So that's why going with green on NMDC Steel. In fact, on Hindustan Copper, we'll have a rare exclusive interview with the management at around 9:30 a.m. to talk about their numbers. Don't miss this one.
All right. Well, that's an important one coming up, and you don't hear from them very often at all. Now, ITI is the next one we're going to focus on. Vinny, tell us more.
So in terms of numbers that have come in from ITI, Q4 FY25 numbers, good set of numbers because the narrowing in terms of losses is quite significant. The losses just come in at 4.4 crores in Q4 versus a 238 crore last year. Revenues have jumped up by around 74%. EBITDA losses also narrowing on that front, 28 crores versus an EBITDA loss last year of 174 crores. There is an exceptional gain this time of 62 crores, but even after that, if you don't include that as well, the losses have still narrowed down significantly. So that is something that is very important in terms for the company. Overall, for the full year also, we're seeing good jump up in terms of revenue, sharp narrowing in terms of losses, and in terms of reduction for losses. When you look at it, this is the lowest level in terms of the loss that we've seen coming in since March 2022. That was the time they reported a profit of 356 crore. And after that, there was a sharp amount of losses that they reported through those years. Now, 4 crore is the lowest amount of loss in those couple of years that we've seen coming in. Stock was up already yesterday 10% ahead of its earnings. So it will be interesting to see if they actually keep up with the momentum or there'll be some bit of a profit booking. But given that the numbers were good this time, we could expect some bit of a green.
Okay, all right. Got that. So ITI on our radar as well. Thanks for that, Vinny. Let's move to Ekta. Talk about Medplus's performance in the fourth quarter. Ekta, morning.
Morning. Well, mixed performance because the margins actually improved, and that was a very strong margin improvement that you've seen on a year-on-year basis. But I'll start with the revenue up around 1.3% on a year-on-year basis, and it was down 3% Q-on-Q. The EBITDA improved by close to 30% on a year-on-year basis, with margins coming in at 9% versus 7.1%, which is a 200 basis points expansion year-on-year and a 50 basis points expansion sequentially. And the profit growth was around 12% Q-on-Q and a strong jump on a year-on-year basis. The company has indicated that there was an 8% increase in the private label sales over Q4 of FY24. Remember, that's a particular segment that they are looking to grow, and they had 100 store additions on a net basis in Q4. So they've met their guidance of store additions, which were around 300 for FY25.
Okay, in fact, we'll have the management of Medplus Health join us in just a bit at around 8:35. We'll have Mr. Reddy with us to talk about that performance. Okay, more numbers from the mid-cap space. Techno Electric, and we have Vamakshi for the details. Vamakshi, it was looking good?
Well, absolutely, Survi. It's definitely looking good for this company. When we look at the revenue, very strong growth out here, 86% higher on a year-on-year basis. The gross margins, though, have contracted by around 91 basis points. But nevertheless, the EBITDA margins have improved, given that there was a decline in the other expenses. EBITDA margins have improved by almost 315 basis points. And the net profit, too, is seeing a very strong uptick of almost 74%. It's not just the fourth quarter, but the entire year as a whole has been very good for this company. Look at the revenue for the entire year. It has come in at 2,268 crores. Now, this is the kind of revenue that the company has posted is at a multi-year high. The EBITDA margins too have been improving for the last 3 years for the company, and currently they're at 15% for the year as a whole. This is much better as compared to what we saw in the previous year, and has reached levels that were not seen as until FY22. As far as the net cash flow from operations is concerned, last year it was negative. This time around it has turned positive. That again bodes well for the company. So given the kind of numbers that the company has posted, going with the green for this counter.
Okay, all right, got that. Thanks very much, Vamakshi, for that. So let's quickly recap our list of stocks to watch today. The ones that have positive news flow are LIC, JK Lakshmi Cement, NMDC Steel, Hindustan Copper, ITI, Medplus Health, and Techno Electric. Stocks with negative news flow would be ITC because of the expected block trade, NMDC, and Bharat Dynamics. Okay, so that's the equity stock list for the morning. Let's now talk commodities. We have Manisha joining in with the latest. Manisha, good morning. So what's the big headline for you?
Well, profit taking across really, because when you look at the crude oil prices, we seem to have come off here as well. What the markets will watch out for is the OPEC and Allies ministerial online meeting on 28th of May. And then 8 of OPEC and Allies members will meet on 31st of May to talk about production for the month of July. So this is where the crude prices will take direction from. Apart from that, there are potential new sanctions coming in on Russia. That is what the U.S. has said. And the U.S. also has barred Chevron from exporting Venezuela crude. They can make it, but they can't export it. So there are some concerns coming in from here as well. The same is the case for many of these metal prices also. We are off the multi-week highs that we were trading at. Copper, for one, is off its 4-week highs. It fell 2% overnight. This is after dollar index is trading off its 1-month lows. There also is a bit of a caution ahead of the U.S. Senate debates on U.S. tax and spending bill. And then the markets also are looking at higher surplus globally coming in for copper. Gold as well has continued to see a decline. We did see a 5% gain in the previous week, but this week has slightly been on the lower side. The rebound in U.S. dollar, the risk-on sentiment coming back is something that's weighing on. And then apart from that, it is all going to be about the Fed's latest policy meeting minutes that are going to be released today. And the street will watch out for the first quarter GDP numbers, weekly unemployment, PCE index. So there's a lot of data from U.S. in the next couple of days. That is where the cues will come from.
All right. Lots to track. Manisha, thank you very much for that. So that's commodities in focus. We'll take a quick commercial break here. We come back. We connect with the management of Medplus Health Services and we discuss their fourth quarter numbers. Very interesting business. So as always, Mr. Reddy will be with us and Himang Jani will be with us on some fundamental stock conversation after that. Stay tuned.